Hello, everybody, and thank you for attending the Festival of Traders. Thanks, Dave, for inviting me here today. It's to speak about a topic that I'm so very passionate about, navigating the markets with Elliott Wave and Harmonics. I've been trading for many, many years, started trading in the 80s with JP Morgan as an institutional trader, and there hasn't been a day that's gone by where I don't use Elliott Wave analysis in my trading, and now Harmonics, a way to see the market cycles. So today, I hope to whet your appetite if you're new, or even if you're experienced with Elliott Wave and Harmonics, so that you begin to see what I see in these markets day in and day out. Dave already read the disclaimer, so we'll move on. This is me. This is my first book published by Wiley, The Trader's Pendulum. It's very important for me to help traders reach their full potential as traders and reap the rewards that trading brings. And this is what the book is all about. It gives you a practical foundation to building your trading business. But I show you this because of the title, The Trader's Pendulum. All traders ride the market, financial, and emotional pendulums when trading the markets. Today's session is about learning to ride the market cycles, so you can be in tune with the market pendulum, and we do that with Elliott Wave analysis. Let's get started. Today, we're going to learn about the 3 pillars of trading success, and I'm going to take you through an 8 lenses checklist, which you can apply to your trading after today, highlighting my favorite Elliott Wave setup. Let's start with the 3 pillars of trading success. We, as Elliott Wave analysts, have 3 pillars: the analysis, the strategy, and the coaching and accountability. So in the analysis, we use Elliott Wave, Fibonacci, and Harmonics because we want to do a top-down approach. We want to see what the market context is. We want to see if we are in a trend on the higher time frames. And what I usually suggest to traders is that if they're day trading, they still pick a higher time frame. So I know a lot of our traders use the smaller time frames, 5 minutes and under. So I always tell them to have a look at 2 higher time frames, namely the 15 minutes and the 1 hour. And if you look at the markets once a day, then you're going to want to look at the monthly, weekly, and daily charts, or the weekly, daily, and 4-hour charts. So that's the analysis. And then we have the strategy. And then the third is coaching and accountability, which is really, really important, the ability part anyway. So even if you are not part of a group of like-minded traders, grab yourself a trading buddy and go through your trades together so that you have somebody to be accountable to, and you're not just trading by yourself. It's so easy to get lost in yourself when you're trading. So I'm just going to touch more on the analysis and the strategy now. In our system, and I'm calling it a system because this is part of our system, the analysis, we use Elliott Wave, Fibonacci, and Harmonics in order to understand the big picture. And the big picture is, are we in an uptrend, a downtrend, or are we moving sideways? And I'm going to show you my favorite Elliott Wave setup today, which kicks off a trend in one direction or the other, and we're going to show you how to recognize that the trend has started. The strategy can be any strategy. The strategy that we use is called the Wavy Tunnel Pro. And with this strategy, we identify the exact entry point, the stop loss level, and the profit target. And we also know when to trade and when to stay out of the market, because removing the emotions is key. I recommend doing a trade plan. And after your analysis, you're going to want to do the trade plan without just winging it in the markets. Unless you recognize your setup and you see it over and over and over again and it pops out at you, then you can certainly trade it because you've probably memorized exactly what needs to be done to be trading it. But that takes practice, and that takes seeing the same setup over and over again and getting it really in the brain so that you recognize it when it shows up in whatever market you are trading. So we use the Wavy Tunnel Pro strategy. It's a moving average strategy. You can use your own strategy or learn about our strategy at the end of this presentation. On the left, we have the trader's roadmap, the 8-wave cycle, and we're going to talk about this today. So let me just see. We have the 8-wave cycle includes the trend move followed by the correction. So 5 waves up to keep it simple, and then 3 waves down. Now, for those of you that have been following Elliott, you know that not all corrections are zigzags like this one, and they're not all simple like this one. Sometimes they're rather complex. So we're going to talk about the setups that pop out that are the simple ones, the 1, 2, 3, and the A, B, C, the zigzag. Because everybody can recognize a 3-wave move. It's when you get past that it gets difficult. So the first 3-wave move is easy to catch, but then if you don't catch that and you try to figure out what the next correction will it be complex, or will the trend start again? It's a little bit more challenging. So the easiest thing is to pick a market top and bottom, or bottom, and then go from there. And we're going to run through this exercise today. So that's the market cycle, the 8-wave cycle on the left. And on the right is our wavy tunnel setup, which really shows the same thing. It shows the 8-wave cycle. And this is the imprint in my mind. When I look at a market and I see that it stands out like this, then I know what to do. But as soon as it gets more complicated, I look for something else, something that looks like this. Bringing in harmonics is really interesting. When I put this together with the 8-wave market cycle from Elliott Wave Analysis, it was an aha moment, and this was just within the last year, actually. So you could actually view a harmonic pattern on the right as an 8-wave market cycle, where the XA is the trend move, and then you have the 3-wave correction. Very, very exciting. I'm going to show you an example of that when we do our exercise together. But this is the nuts and bolts, trend and corrections, trend and corrections. Maybe I should just say a little bit more about the trends and corrections. When you see a 5-wave move, a trend move on the left, the best way to capture it is to draw a channel around it. Draw your channel lines or your trend lines around the market action for the trend move. And the 3 waves that are impulsive or trend moves are the waves 1, 3, and 5. And then you have the corrections, the wave 2 and the wave 2 and 4. On the right side, you have your A wave, which is trend, B wave, which is correction, and C wave, which is trend. So you have many, many trend moves here. The idea is to get in to the next trend, whether it's the wave 1, the end of the prior trend, or the wave 3, which can be a very explosive move or not. But you usually know if you're in a wave 3 because that's the type of move that you can't even get into. The retracements are so shallow. And then the wave 5 finishes up the trend move before we get to the end of the trend and start to do the correction. Today, we're going to be focusing on the 3-wave move. That's my favorite Elliott Wave setup, because you always know that the market is going to move in 3s at a minimum versus 5. So let's look at this 8 lenses checklist and look at my favorite Elliott Wave setup. You might want to take notes or take a screenshot when we work through this whole exercise together. And if you have any questions along the way, please feel free to ask, and I will probably answer them at the end, but you can think of your questions along the way. A different way of looking at the same picture. So what do you see here? Do you see an elderly couple holding each other, or do you see a Mexican guitar player serenading his girl? So this is called a paradigm. And so too, in trading, we have different ways of looking at the markets. Call them paradigms if you want. So it's my request or my challenge to you to look at this exercise with a new pair of lenses. And it might be a different way of looking at the same chart or the same picture, just like this picture. So this is an exercise in finding the end of the trend and setting targets using Elliott wave analysis, and harmonics and Fibonacci. Okay? What do you see here? Some of you will see waves 1, 2, 3. Others will see waves A, B, C. You might see trend, correction, trend. On another level, you might see a way to profit from the markets day in and day out. You might see the trend is the friend until the end of the trend. Still others will see buyers versus sellers and learning who is in control. Still others will see an equality trade. You might call it a 1, 2, 3 reversal pattern. You might see an AB equals CD harmonic pattern. You will see this as a battlefield between buyers and sellers. You might see this as a zigzag or a flag pattern. Still others will see this pattern as a market fractal. No matter how long you've been trading for, you will see these patterns over and over again in every single time frame. So this three-wave pattern shows up on the weekly chart, the daily chart, the 4-hour chart, the hourly chart, the tick chart, the 1-minute chart, the 5-minute chart. These patterns show up everywhere. So the ideas that we're going to present today are how to find these patterns and how to trade these patterns and how to set targets and take your profits so that these patterns don't elude you and you capture the profits and then move on. Let's get started. The first thing we do, and this is lens 1, we find the visible price high on the chart. Now you don't know that it's the visible price high on the chart, but we're going to show you ways to find it shortly. And the first thing that you might see is a reversal candlestick pattern. So here we actually see almost a triple top and a long tail, a long hammer. Well, not hammer, shooting star, it's called at the top of the market, a reversal candlestick pattern. The next thing, that's lens number 1. You're going to just look, have an empty chart and just look at the chart. How do we know that it might be the top? Well, the first thing that we see is divergence. Divergence is when the price makes a new high, and we use the awesome oscillator. In this case, the awesome oscillator makes a lower high. So that's our first clue that, maybe this is turning around. We also draw our trend lines and channel lines. We just got done saying that the Elliott wave trend plays out between channel lines. So we want to draw our channel as long as the trend is intact and be prepared in case the channel line is broken by price. And that's what you see here. We see divergence, and then we see the bottom trend line or channel line breaking down. Do we take the trade right now? No, we're not taking the trade right now. We're running through a system of capturing the three-wave move which follows, right? So imagine that the move on the left is the trend move, and now we're going to correct this trend move in 3 ways. Lens number 3. There we go. The first swing happens, and we've labeled it first swing. And the second swing is a retracement of the first swing. And then, no, actually the second swing, the first swing happens and then we have a retracement of the first swing and then we have the second swing. This is called the equality trade, the ABC, the 1, 2, 3. So the first swing could be wave A or wave 1, and then we retrace. That could be wave 2 or wave B, and then we continue on. That could be wave C or wave 3. A three-legged move, a three waves within a three-wave move, 3 waves. Okay? So the equality trade is measuring the distance of the first swing and projecting it from the top of the correction to measure the same distance for that second swing. That the red lines there represent the same size move. So the second swing with that red line shows a 100% of the first swing move. And that's our first target. That's our first target when you don't include anything about Fibonacci or harmonics or any kind of Elliott wave measurement. So that's the equality trade. We measure the swings. Now, how do we trigger the trade? Well, let's talk about that on the next slide. This is, I've labeled a 1, 2, 3 reversal pattern here. This is lens 4. And don't mistake these for the waves 1, 2, and 3. It's point 1. You can see point 1 in purple. That's the first, that's the high of the correction. Point 2 is the first move down. Point 3 is the correction. So you can see the 1, 2, 3 pattern. So what you do is you set a stop sell below point 2. Now, look what happened there. The trade didn't trigger because it really needs, you want to give yourself a little bit of room and you want it to close. You want it to close below your trigger point. Had I left it any higher, we would be in. Your stop is above point 1. Either way, you wouldn't get stopped out because point 3 should be below point 1. It actually double topped there, okay? But that's your 1, 2, 3 pattern. There are some prettier 1, 2, 3 patterns, of course. Usually the point 3 doesn't retrace 100%. The ideal is a retracement of 50%. So we sell and we're in. Trigger the trade, confirmed entry. That's what the 1, 2, 3 reversal pattern gives us. It gives us a confirmed entry to get in. So we're not getting in at point 1. We're not getting in at the break of the trend line, although you could. That's just another type of trade. We're getting in at the 1, 2, 3 confirmed entry. Let's go on to lens number 5. For lens number 5, the equality trade with Fibonacci expansion tool. Now we're going to use our Fibonacci expansion tool to set some targets. So a Fibonacci expansion tool uses 3 points. The first point is at the start of the move. The second point is at the end of that first swing, the end of the red line. I don't know if you can see my cursor here. Maybe I should use it. That would be a good idea. This is the first point, this is the second point, and then the third point would be up here, and then the targets show us a 100% of the first swing, which is what we already know because we manually calculated it. And then the second target that I have here is 127.2%, 138.2%, and then 161.8%. Very often, this third leg can move to 161.8%. And that's not that either for the wave C or the wave 3. It's good to be a little bit conservative and start at the 100% target. So that's the equality trade with the Fibonacci expansion tool. So we're dressing up the chart a little bit, right? The next thing is introducing the harmonic pattern. And the goal of this is to find targets that are overlapping targets. So we just did the Fibonacci expansion tool. We used that. let's see if we can find an overlapping target using harmonics, the AB equals CD pattern. Well, the blue area shows the target for this AB equals CD pattern. And wouldn't you know that it falls right in between the 100% and the 127.2% Fibonacci expansion. So that gives us some confidence that that would be maybe a good area to target for our profits after we've sold, right? We're not going to get too excited about a collapse in gold at this point, because we're coming up with some reasonable analysis to calculate targets. And then after we do this exercise, I'm actually going to show you what the daily chart looks like. Okay, because using the 4-hour chart, we've picked a piece of it, but I want to show you the context. I'm doing it backwards on purpose. By the way, the charts that I'm using are called motive wave charts. If you would like a 14-day trial, you can go to bit.ly/EW charts. Okay, and this presents the harmonic pattern for you. Okay, so that's lens number 6. Let's look at another harmonic pattern. Remember at the beginning we showed you the 5-wave sequence to the left followed by the 3-wave harmonic pattern. The AB equals CD is a building block for a bigger harmonic pattern. So we see it over here. This is a bat pattern. A bat pattern, the characteristic is typically where we have the XA swing move, and then we have a B and a C, and the A and C are almost double top. Okay, there are a few other things about the bat pattern that differentiates it from other harmonic patterns, not important for this right now. The important point is that we have a swing move moving up, the Elliott wave trend move, followed by a 3-wave pattern, and it's point D that we want to get a handle on. So what is this bat pattern telling us? It's telling us that point D can fall within this range. Very interesting that it starts at the 127.2% and works its way down. Okay, so do we have overlapping targets? Well, I would say so. I would say for the AB equals CD pattern, it started at we had the overlapping target with the Fibonacci expansion somewhere up here between 100 and 127.2, and then this bat pattern target is at 127.2 with the possibility to go deeper. Okay? And this is the picture that we showed you earlier with the 8-wave market cycle and the harmonic pattern. I'm just giving you a taste of this today so that you can go back and look for this yourself in the markets that you're trading. So that's lens number 6. Lens number 7 is the 8-wave cycle labeled with Elliott waves, 1, 2, 3, 4, 5, A, B, C, with our wavy tunnel setup on it. And this is actually what we call the end of trend trade. It's the PW fill the gap trade, and for a visual way of taking the trade. We've just gone through a whole, bunch of analysis, but once you learn it, it's pretty easy to do. It doesn't take too long. This is just another overlapping confirmation that we really like the trade and that we're looking for our target to confirm the analysis that we did. So lens number 8 is the convergence of Elliott, Fibonacci, and harmonics. Now, this is a lot on a chart. I just put it all on here on purpose, but it is a lot to look at. basically everything that we've done so far. We marked the reversal, we had the breakdown, we had divergence and the breakdown through the channel. We had the first move down followed by the correction. We triggered the trade for the third leg down, and then we find the targets. And you can take your, once you do that analysis and you find the targets, you can set a few different profit targets. I would recommend that you set the first profit target at the 100% mark, and maybe set the second profit target at the 127.2% mark, and maybe the third target at the 161.8% target, just in case it gets there. If it doesn't, so then you can move your stop. If you start at 100% and then move down to 127, you can move your stop back to 100% once the second target is hit. So that's a trade management approach of setting 3 different targets. Now, this is very, very interesting. Now, I want to show you the daily chart where this pattern actually showed up. And the pattern actually showed up in this little blue box, in this area, where we had the move up, the trend move up, and then we had the 3-wave move down. Now, once you have the bigger time frame up and you set your channel lines, okay, you draw your channel lines, you also see that this move coincides with channel support. So the move down to the 127.2% Fibonacci extension coincides with channel support on the daily. So this is really, great to see, because then when you trade harmonics on their own, the point D is for taking the trade in the opposite direction. So once the harmonic pattern completes, at point D, you're supposed to be buying. Now, I showed you a way to use it to find the profit target at point D, but you could actually be buying down here. But that would require doing the analysis in another, doing it another way, unless you feel that you could sell and then do 2 analyses, sell and then take your profits and then do a second analysis for buying. It's very difficult sometimes for traders to go both ways. They're usually going with the trend, or they're going counter trend, but to go counter trend and then to go with the trend is usually difficult unless you plan it out with a trade plan. So I think that this is a really fun example to use and to show you, to illustrate the bigger picture. Once you see the bigger picture, it adds a new perspective on the trade anyway. So let's just review. And then I'm going to show you what we have to offer and then take questions. And I see the link is already posted there, wavytunnelpro.com/start. So this is what we've done. We started with the blank chart. Why don't you take a screenshot of this? This summarizes everything that we did. We did some analysis to find the end of trend. Then we triggered the trade. And then we found our price targets using Fibonacci, harmonics, and Elliott waves. And then we put it all together, and we call that the Elliott, Fibonacci, and harmonics convergence with the Wavy Tunnel Pro strategy. Okay, well, let's show you what we have to offer, and if you have questions, then by all means ask. Want to know how to join a community of successful traders who follow the same system? Well, then why don't you join us at the Wavy Tunnel Pro? It's the complete A to Z blueprint for creating and following a system that expands the potential of Elliott wave, Fibonacci, and harmonics. And in our system, we have 4 different trend following trades that we teach you using the Wavy Tunnel: the breakout 1, 2, 3, and 4, And they actually coincide with waves 1, 2, 3, and 4, believe it or not. And the two end of trend trades, we call them the PW, the price to wave, and the fill the gap. And that's to take advantage of the market cycles. The 10-week course curriculum, this is a full course, and you can find out more about it at wavytunnelpro.com/start. I'm actually going to give you a promo code 100 off, and OFF is in caps, and that's for Festival of Traders, because we started our live webinar sessions already, but we have a lot more to go. But once you sign up, this is what you get. You get the Elliott Wave Core Principles, which is a complete Elliott Wave course. It's excellent. Fibonacci Primer, the Wavy Tunnel Pro methodology, 9 different modules. Excellent content. That's all I can say. Just excellent content. You'll see this all on the page, and then the harmonic patterns. So next week what do you get with this course? Online coaching. These are the bonuses. Online coaching classes, 22 live sessions starting now. We've done some of them, like I said, but they're all recorded and in the website. The class that we have is phenomenal. They are just so much fun, asking great questions, learning so much. They're just loving it. We have a refund policy, and we haven't gotten any, nobody's asked for any refunds. So that says a lot. So bonus number 2 is you get access to the recordings of the coaching classes. You get access to a scanner. We have a Wavy Tunnel Pro scanner, which scans stocks, commodities, so CFDs from a Forex trading platform, and currencies. And you get 2 months of our Elliott Wave Desk Ultimate Pro services, which includes daily wave counts, 2 daily videos to show you setups, Wavy Tunnel Pro trade alerts, trading rooms. We have 7 trading rooms during the week, including a stock room. We offer comprehensive trade plans or cheat sheets for these setups. We have exceptional extra videos. We call them tip clips. We have a private membership forum where the students are just loving that. Course manual and Skype, email, and phone support from our amazing team. This is the Wavy Tunnel Trade Alert Performance. This is just an example. These are actual live trades that we've been putting out for the last year. And of course, the results will vary based on the amount that you risk. We've actually been risking less than 1%, so our return is a little bit less. It's about 75% over the last year, okay? So because we've been risking less on an actual live account. This is part of what you get. This is the price with the promo code with the discount, 1 payment of $14.97 or 3 monthly payments of $5.97. So check it out and have a look, okay? And I'd like to take some questions now. This has been a lot of fun for me, and I'm all about finding the market cycles and understanding how to trade the market cycles. So the trend moves and the corrections. Any questions? I'm not sure that I'm seeing any questions. So there might not be, oh, let's see. I'm looking at the chat box. Let's see the questions. Okay. I have been looking at the wrong thing. Okay. So one of the questions is this good for intraday as well? And the question is absolutely intraday. Absolutely. So again, you can be a momentum trader, a day trader, you can be a swing trader, a long-term position taker. you're going to use the wavy tunnel setup on all the time frames that you're trading, and we show you how to do it. So in our trading rooms, we have, the students are mainly day traders, I would say. Absolutely. Some of our students trade the ES. The data that we analyze, not the futures data, we analyze the CFD, so off of a Forex trading platform, but they easily look at the ES using the wavy tunnel setup. And our daily analysis, which analyzes 16 different markets, includes the S&P, so the CFD. Okay, but it's pretty well the same data, but it's 24-hour data. And that's what we analyze. We analyze 6 different currency pairs, oil, gold, 5 different stock indices, and 2 cryptocurrencies every single day with a video.